Hi, in this video I'll be sharing with you the most effective strategy that you can use in growing your small account size. The pairs that you can trade using this particular strategy. In this video we are looking at only derived pairs, and this derived pairs is focused and centered on boom and crash. Now in the subsequent video I'll be making a video on the volatility indices that you can trade to grow your small account, everything you need to know about it. So this video is going to be in series, and then the third series is going to be on the currency pairs that you can trade in growing your small account. One of the greatest challenge in growing a small account is the volatility of the market. And since your account size is small, it won't be able to withstand a volatile market. So what do? You need proper risk management, high probability trading strategy, and a less volatile asset that you can trade in order to grow this small account. So for this video we are looking at the derive, boom and crash asset that we can trade in growing our small account. My name is Soji and you are welcome to Soji FOREX. If you are coming across our video for the first time, please do well to give this video a like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. If you are interested in joining our mentorship class, there is a link in the description of this video where you can join our Telegram group and enroll for the class. So here is the indicator. We are using the Bollinger band. The period is 130, deviation is 2.0, the shift is 0. You apply to close. So you can take a screenshot of all of this and do the settings on your own accord. And then here is the second moving average. Then we have our relative strength index. As you can see, the period is 9. And as for the styles, which is the color here, you change it to the color of your background. So if your background is black, change it to black. And then afterwards we have our commodity channel index, just as you can see. And if you have done your setting correctly, your chart will be looking exactly like mine. So what asset can I trade? You can look at my account size. My account size is 5.19 cents, $5.19. Now what asset can you trade using this particular account size? Here the first, as you'll be trading only two assets of the boom and crash, which is crash 500 and crash 1000. Those are the only two assets you will be trading, only these two, crash 500 and crash 1000. Now, and the only thing you will be doing is that you will be buying the crash 500 and crash 1000. You are not going to sell it in this process of growing your small account. Because once you enter the trade, the default movement of the crash is a bullish movement, which means that defaultly crash buy, okay, before the drops in between. So, and that is our target. So you will be buying crash 500 and 1000. Okay, so having established that, we have now identified our assets. Please pay attention to every of this rule if this strategy must work for you. Then number 2, you must not have two running trades at a time. What that means is that you don't need to have a buy trade, a trade running on crash 500, and then because you see a signal on crash 1000, you now execute another trade. No, we don't do that. This strategy will not work in that way. What that simply means is, based on your account size, you are risking too much, okay, which is not suitable for your account size. So if you have one trade on crash 500, there is no need for you to pick any other trade on crash 1000 until your trade hit stop loss or take profit. So you must take note of that. Until your trade hits stop loss or take profit, right? Now that is one thing you must know. And vice versa, even on the same crash 500 that you are having a trade running, you don't need to have two entries for any reason. One entry at a time, okay? And then secondly, you need to pay attention to this. There are many a times, let me give you an illustration. This is crash 1000, and I want to explain something briefly. For those of you in the group, yesterday, based on this bullish candle you are seeing here, this bullish pin bar, I gave a buy entry signal. And that buy entry signal I gave plays out from here, from this point where I gave the signal up to this point before the trade falls. So that trade plays out in profit for almost 1 hour. Many people, I don't know whether they take profit or not, but you must know this, that growing a small account, you are scalping. You are not a swing trader. You are not holding the trade, which means that whatever you gain between 15 at most 30 minutes trading this strategy on boom and crash, you should be out of the market. On no account you'll be holding the trade for 1 hour, 2 hours. It is at your own risk. But based on how I've backtested this strategy, it is very much effective that way. So this particular trade I called yesterday plays out, and I close out of it. Then look at this. I have a second entry. When price drop again, I got this bullish engulfing candle. Let me zoom it a bit. I make an entry based on this bullish engulfing candle. This particular green candle you are seeing, this bullish engulfing candle was my second entry. And this entry plays out for good 1 hour before it drops. So if I'm still taking my 15-minute to 30-minute trade, I will still be in profit. And then when I woke up at night, I saw that price also is building up around this zone. And when I saw this bullish candle again, this particular one, I made another entry here. And my take profit was here, my stop loss was here. And that is the profit that you are seeing here. So this strategy, it works. You only need to what? You need to be patient to wait for it. So I've given you the guidelines, I've given you the rules. And the fact that the first one hit your stop loss does not mean you should go on a revenge trading. Always wait for the setup to present itself. So this is for crash 1000, and then this is crash 500. All right. So how do we now make our trade? Number one, we'll make this trade by determining our trend of the market. Your major target in this is the middle Bollinger Band. It is not a solely indicator trading. It comprises of both indicator and price action. But for us to determine our trend, we are using our middle Bollinger Band. You can confirm this from 1 hour to 4 hours. Okay? So if price is above the middle Bollinger Band, we are in an uptrend, and if price is below it, we are in a downtrend. And I will tell you why. Because it will take a lot of bullish pressure for buyers to be able to move price from below the middle Bollinger Band all the way to above this middle Bollinger Band. And why? Because this particular middle Bollinger Band is not the default it's not the default Bollinger Band whose period is just 20. This is period 130. So it will take a bullish price movement to be able to push price to that extent. So once you see price above the middle Bollinger Band, you should know that there is already a strong bullish momentum. Alright, and if you have not subscribed to the channel at this time, please do well to subscribe to the channel now. Turn on your notification bell so you'll be the first to get notified. Like the video, share, and ask your questions using the comment section. So having established that, we validate when price retest our middle Bollinger Band. So you can see this. Now here is another very important trick you need to know. When price is pushing to the upside, when price is above the middle Bollinger Band on a 1 hour time frame, there is a tendency that when you go to a 4 hour time frame, price is still below the middle Bollinger Band. That is, if you are doing your 1 hour analysis and you are using only 1 hour to determine your trend without going to 4 hour, anytime price is above the middle Bollinger Band, please do well to look at the 4 hour time frame. There are times that price is already below the middle Bollinger Band on a 4 hour, but on a 1 hour it will be above. Remember, price will always cross the lower time frame before going to the higher time frame. It's just like crossing a stair. So that will happen. So in that scenario, what do? In that scenario, you need to pay attention to the 4 hour. And what that means is that anytime you now see that price is approaching the 4 hour middle Bollinger Band, just as in this case, you should exit your trade or do not make further entry and then wait for price to cross it on the 4 hour time frame. Once there's an agreement between the 4 hour middle Bollinger Band and the 1 hour, the momentum becomes more stronger, and so you can capitalize on that in also taking your trade. The same thing is applicable in all of these assets, and I believe you understand what I mean by that particular explanation. And so price is, that is how you determine the trend, and that is how you take advantage of it. So for you to buy, you must be patient for price to always be at above the upper Bollinger Band. Otherwise, do not buy. For crash 500 and crash 1000. So now, how do we do or find our entry? Now when price is above it, you need to wait for a pullback. This pullback can be either, because when price is in a strong bullish trend, price respects the moving average 25 exponential. And just as you can see in this case, you can see that price pulled back into it, gave us a bullish pin bar, just as you can see here, and then another follow-up closes above the moving average. Then you can make your buy entry. So you can see that happening on and on. That is another one way you can buy. The second way you can buy is for you to wait for price to pull back to your middle Bollinger Band. So you see that price crosses it, price pull back to it, and then it will give you a signal for you to buy. And just as you can see there, on any of the time frame price pullback, provided it is an uptrend, it becomes a continuation signal in order for you to buy. So you will now need a price action in order to validate your entry. And here you can see again price pull back to the middle Bollinger band, and here we are having a buy. Price closes above this, then we have our buy trend. You must get an engulfing candle or a pin bar candlestick. Now you must always set your stop loss. Okay, you must always set your stop loss. Now this strategy is so effective that if you follow everything carefully, there is no way you will lose 3 trades on a roll. And let me do this little calculation. So for instance, if your account size is 5 USD and you are using a lot size, your stop loss is 1.2. So we are going to divide this. So if you are using a lot size of 1.2 in each of the trade, it simply means that you need to lose 4 trades consecutively in order for you to blow this account. And this is not possible. If you follow everything I have shared, listen or watch the video more than once, you realize that it is not possible for you to lose 4 trades in a row. It is not possible. Do not double trade, do not over leverage. Follow this carefully and you will be amazed at what trade result you will get. So how do we now find about this lot size? All you need to do is for you to open your trade. Remember, the minimum lot size is 0.2. So you will now open a trade of 0.25. When you open trade of 0.25, you will close the trade. Close 0.2 from inside. So if we do minus 0.2, your trade will now be running at 0.05. So this is exactly what your lot size will be. But since you cannot use 0.05 to open a trade, you need to open with 0.25. So that is how simple it is. So that is exactly what you need to do. And if you have watched this video for this time, thank you for watching. And I want to hear from you in the comment section. And also for the mentorship class, you can click the link in the description of this video and it will take you right to the group where you can make your inquiry. Thank you for watching and see you in the subsequent video.